Here with another Business Freedom Conversation post. So here's a great video from Yahoo Finance, an interview with Jeff Harmening, the CEO of General Mills. This is a really successful company, and they're navigating all of the challenges that we're all going through right now really well. The start of the video is talking about Blue Buffalo and the shift in consumer spending in the product mix. They're shifting to cheaper products for the pets. I think you'll find this video interesting because of all the different things they touch on, and it gives you a glimpse of what a really successful company does related to value of their products. The consumers are looking for value, is what he's saying. And they're catering to it, and that they want value, and in his business, because it's primarily food products, taste, which means if they buy it, they want to make sure their family's going to eat it, which means they're looking to quality. He's doing new product innovation. General Mills has 4 out of the top 5 new products in the cereal category, which is pretty impressive. Another thing they're doing, which is part of the stagflation playbook, is they're innovating. They're tweaking the different products based upon who's buying it and coming up with new segmentations in the marketing. He mentions, this is also really interesting about what's the real inflation rate, that they've experienced over the last 3+ years 30% increase in cost, which is significantly higher than our government has been telling us that we've been experiencing. But what he's also saying is he's concentrating on productivity, another element of the stagflation success playbook, and that they're having a 4% productivity increase in each year. So that's pretty impressive. They're also looking at M&As, mergers and acquisitions, another element in the stagflation success playbook, and they've been very successful. In fact, Blue Buffalo, what he starts out the interview with, was an acquisition a few years ago that they've doubled the business in the 5 years that they've had it. Another thing that they've concentrated on, which is improving their advertising. They're spending more money on advertising, and they're getting the advertising to be more efficient. Translation, they're looking at the numbers and they're following which numbers work. Another thing that he mentions is that their price packaging. I'm sure everybody's seen that, where he's able to raise prices, but he changes the size of the package because the consumer's looking at a price point. So price point management, really critical. And another thing that he's doing is product differentiation. Well, that's key for any business. How are you different than the competition? And he's keying on that. Take a look at this interview. You'll find it really beneficial to see how he's managing all these issues that you're facing right now. So this is Greg Andrick, Business Freedom Conversation Post. Enjoy this one. I'll see you on the next one.
Out with better than expected earnings. The company sold a lot of Cheerios, a lot of Cinnamon Toast Crunch, but maybe had a little bit of a challenging quarter in pet food. Let's get right to General Mills Chairman and CEO Jeff Harmening. Jeff, always great to see you. It's been a while. Thanks for hopping on right after your earnings call here. Good quarter for you guys. Beat on earnings, guidance looked intact. But let's start on that pet business. You called out some weakness in wet pet food and pet treats. Now, stuff's not exactly cheap. It's a little expensive for some households. What do you think those trends there say about the U.S. economy?
Well, Brian, first, it's good to be back with you again. And you're right, we had a good first quarter. In fact, we've had a good run over the last few years. We're a $20 billion business with $9 billion brands. As it relates to pet food, it was a tough quarter, but a couple pieces of context. The first is that we've doubled the size of our pet food business since we bought Blue Buffalo 5 years ago. And we think this trend toward humanization is going to continue. In the short term, it is clear that mobility, pet parents are more mobile than they have been and going back to the office more. And so they're treating less, a little bit less wet pet food. So that was a drag on our sales. However, our dry pet food sales were up. So that's positive. And in the short term, consumers are seeking a little bit more value. And so we're taking actions like improving our advertising and doing what we call price pack architecture to make sure we hit certain price points. So even though our sales were flat, we're thrilled with what Blue Buffalo has done for us, and we see a bright future ahead for it.
Jeff, wow, I remember when you guys made that Blue Buffalo acquisition. It seems like yesterday, but it's been a couple years now already. What is that? Why is the consumer opting for dry dog food? Is there just, and even cat food, is there just more value in that bigger bag than buying wet food?
Yeah, there are really two reasons, Brian. The first is that there is more value in dry dog food. The price per pound is lower than it is for wet pet food. The other thing is a lot more convenient. So you can leave out dry dog food or dry cat food and have your pet eat it throughout the day if you're not going to be there, which is something you probably don't want to do with wet pet food. And so for those two reasons, we're seeing nice growth in our dry dog food business.
You talked on the earnings call a lot about standing up some bold advertising for Blue Buffalo in the coming quarters. Talk to us about that.
Well, Blue Buffalo was founded on the premise that we feed our pets like family, and we want to make sure that pet parents know what's in Blue Buffalo and compare that to what's in other dog food. Because if you're going to pay a premium, which consumers do for things like for Blue Buffalo, you want to make sure you know that what you're getting is better than what you could have gotten otherwise. And so, especially as consumers are looking for value, we think it's important that consumers, pet parents, know exactly what's in Blue Buffalo and why that's different than other pet foods. And so we call that the True Blue Promise. It's the way the brand was founded. We've stayed true to that, and we're kind of really going back to our roots.
That focus on value by the consumer, Jeff, is that being reflected in those namesake businesses like a Cheerios, like a Cinnamon Toast Crunch, and also in your snack business?
It is being, when consumers get pressed, the first thing they go back to the supermarket, they go to at-home eating. And so we are a value player when it comes to at-home eating versus eating at restaurants. In fact, eating at restaurants is about 4 times more expensive.
I can't afford to go out, Jeff. I can't afford to go out. Darden's going to report earnings this week. Olive Garden, I can't afford this stuff anymore. It's crazy.
But as you say, our cereal sales are good, and that's because cereal offers a great value. It's convenient. It tastes good. It's good for you. All of our cereals are whole grain. Yes, Cheerios is whole grain, but so is Cinnamon Toast Crunch. They also taste good. And so those are the 3 things that make cereal so attractive, and cereal tends to perform well in these kind of markets.
You made a very important point on the earnings call, Jeff, you and your team. You said consumers might be focusing on value, but they're not eating less. Is that correct?
Well, that is correct. Consumers just finding value, trying to find value in places where they shop. And so they're looking for places where they can get a better deal. And that might be a club store, a mass merchandiser, or a dollar store. But they're also looking at things like the package size itself. And if I was getting a large size, now maybe I want to get a medium size because I want to make sure the things don't go to waste. Importantly, they're still looking to our brands as they always have, because it's also important when you don't want to waste food that your family's going to eat it. And when you have products like General Mills with our $9 billion brands, they got there for a reason, and that's because consumers love them. And so even though consumers are looking for value, that doesn't only mean price. It means convenience. It means great taste. It means nutrition. It really means something your family's going to eat.
It sounds like you and team are very focused over the next couple quarters at taking market share, whether it's more market share in cereal, more market share in snacks. Talk to us about the innovations, some new products that you have coming down the pipeline.
We're always focused on market share because it's one of the things that we can control, and we've grown our market share in more than 50% of our categories for 5 years in a row. And it's because we're focused on advertising. Our advertising was up double digits in the first quarter. As you mentioned, our new product innovation is really good. We have Häagen-Dazs in the yogurt aisle now, which is off to a good start. We have many varieties of things like Lucky Charms and Cocoa Puffs. I mean, it's hard to resist those kind of things. And we have Häagen-Dazs ice cream outside the U.S., Macaron, which is off to a phenomenal start outside the U.S. And so we're really pleased with our new product efforts. In fact, in cereal, we have 4 of the top 5 new products over the last year and almost a 50% share of all new products in cereal. And so whether it's getting back to our good marketing, which we're doing, or innovating, or getting good distribution, our distribution is up this year. Those are the kind of things that we're really focused on, is executing the things that we can control.
Another thing that stood out to me, Jeff, is as it pertains to guidance, you noted it looked like you're still factoring in moderating inflation. Now, it's not lost on me and the people watching this all over the world that today is Fed Day, and the Fed is likely to come out and say, well, inflation has moderated, but now it's starting to pick up with oil back over $100 a barrel. How concerned are you about the inflation outlook?
Well, we've been dealing with inflation for the last few years. If you look at the last 3 years, including this one, inflation for our business is up 30%. Now, importantly, as we look at the year ahead, inflation is only 5%. So it's moderated from 13% last year to 5% this year. So it's gone down, but it hasn't gone away. And it's hard for me to see a scenario where inflation is going to go away completely. It's at 5% for us this year. For us, the good news is we have productivity gains, and that's our first line of defense. We have generate about 4% of savings in productivity every year. We have a little bit of pricing. And so we should be able to manage this okay. But for the viewers who think that inflation is going to zero, that's not the way we see it. And we believe that labor will probably be the main driving force of inflation, even if it's going to be less than what it was a year ago.
Fair enough. And in the last few minutes that we have with you here, Jeff, look, we showed your bio. You are not afraid of making big deals for this company. Now, you were rumored to have some interest in Hostess. Now, I know you can't talk too much about that. Of course, Smucker looks to have gotten that one. But you have acknowledged that you've maybe been a little bit boring with acquisitions on that earnings call. Talk to us about the priority to make that big deal at General Mills over the next 12 months.
Yeah, we're really pleased. You're right. We don't talk about any specific deals and rumors and things like that. But we've been very consistent over time on what we think. I mean, the most important thing we can do is grow our core and grow our core business. And then we add on top of that. And we've been successful at growing both our core business, but also successful at M&A. And it's true if you look at Blue Buffalo, if you look at Annie's, if you look at the pet treat business we bought from Tyson, TNT, Pizza Crust. So we have made really good gains in acquisitions, and we'll look to make some acquisitions into the future. We think our growth rate now is roughly 2.5%. We'd like to add 50 basis points of growth through acquisitions and divestitures, but we're also disciplined as to how we do it. And we've always been disciplined. We've got a good balance sheet. We like our core business, but we will still be on the lookout for assets that we think can accelerate our growth and things that we will be particularly capable of doing well, but we'll be disciplined as we do that.
So we've seen this battle for a Hostess, but we've also seen Campbell's Food, of course, spend a lot of money to buy Rao's pasta sauce. Is your industry at a moment where you need these type of really transformational acquisitions again, like they were done in the past, to jumpstart sales growth?
No, we don't. I mean, before the pandemic, before we bought Blue Buffalo, we were growing at a trajectory of 0 to 1%. Now we think we're at 2.5%. And so whether it's being more competitive on our core or through the acquisitions or divestitures we've done, like Yoplait in Europe, we've added to our growth rate already. And so we don't need to add more in order to be able to grow. Now and the idea of replacing what's happening now with growth is not something that we really consider. We look at long term and what's the long term potential of our business. And so while we would like to do deals, we like the businesses we have. We like the fact that our dividend is growing and we're returning money to shareholders. And if we don't find something that we can grow, we will be happy to repurchase shares.
Jeff, you almost got me yesterday in my local supermarket. Almost picked up some pumpkin spice Cheerios. I think I saw that on the shelves, right?
I would recommend it.
I'm sure you would. Jeff Harmening, General Mills Chairman and CEO. Always nice to get some time with you. Don't be a stranger.